Hi, I'm Perry Beebe from All Residential Real Estate. I'm often asked what's going to happen in the property market over the next 6 months, and shortly I'm going to give you my ideas on that and talk about what is probably the biggest factor which will drive property sales for the rest of this year. But first of all, let's just look at what has occurred so far this year. What we have seen is that we've seen price reductions over the first 6 months. And it's been a bad market for sellers, but also it's been a bad market for buyers as well. Many buyers have not been able to get finance, and this has been attributed to the Royal Commission, the Banking Royal Commission, and the changes to the lending practices, primarily around the recording of expenses. Now, prior to the Royal Commission, as a borrower, I could put in whatever I thought my expenses were. Following the Royal Commission, it has been decided that the bank must apply a minimum standard of what someone's expenses would be. And then this has reduced people's capability to rent properties. So although there's been a buyer's market, there hasn't actually been many buyers around. Now, I think that's also can be partially attributed to the 2 elections that we've had in New South Wales, because certainly after the election, the national election finished in May, we immediately saw an increase and pick up in the level of interest and actual purchases of property. Since then, we've seen the 2 interest rate reductions, which will certainly increase the capability of people to be able to buy property over the coming 6 months. But the biggest factor that has occurred is actually a change by the Australian Prudential Regulatory Authority. At the beginning of June, they sent out a letter to all the banks asking for their feedback on the current stress level tests for applications for loans. Now, to give you a bit of background, back in 2014, APRA, the regulatory authority, told the banks that they had to apply a stress test of at least 7% interest on any loan application. Now, what a stress test is, basically it measures whether the borrower will be able to pay the loan repayments if the interest rate went up to 7%. For the record, most of the banks are actually applying a stress test of 7.25. Now, at the beginning of June, APRA asked the banks for their feedback on whether that should be reduced now, given that interest rates have been quite low for some time. And at the beginning of July, APRA made their decision and advised the banks that from now on, all they need to do is provide a stress test which is 2.5% higher than the level of interest that the borrower will be paying at this point in time. So since there's lots of loans around at 3.5 or even less, it means that the stress test will be around 6%, which is roughly a 14 or 15% reduction from the previous stress test. And that means that borrowers will be able to borrow at least that amount more than they would have previously. Now, I see that as being the biggest factor driving the property market over the next 6 months. At the moment, there's not much news about this in the press, but I'm sure it will come out over time in July. Based on that, my forecast for the next 6 months is that we're going to see many more buyers in the market, both first home buyers as well as investors. And what this will mean is not so much that prices will go up or property prices will go up, but what we'll see is that more properties will be sold at those current levels, and there will actually be buyers attending opens and making offers. So that's my forecast. If you're interested in finding out what your property would be worth in the current market, please contact us by clicking the link on this page. I look forward to speaking to you soon. Bye for now.